Hello, in this video, I'm going to talk about the proposed merger or the announced merger between Capital One and Discover, and I'm going to provide 9 predictions. But before I start, I want to get a couple of things out of the way. First of all, my busted lip. My dog might walk around here in a minute. His name is Pickles. He's not coming, of course, now. He loves to play tug of war, not like a normal dog that likes to chase balls. He'll bring you a rope and ask you to pull on it. I won, but when I won, I hit myself in the mouth. So that's what happened here. I did not get in a fight or anything like that. And number 2, which is really important, and I want to make sure I acknowledge the people impact of these type of announcements and mergers. I've been through mergers myself. I've seen how it can cause a lot of stress and a lot of anxiety and a lot of gossip and rumors and all of the things that surround an announced merger and an actual merger. And I understand that. And even though I'm talking about this, I just want to acknowledge the people aspect of this. And I think that everyone should acknowledge the people aspect of this. This is not two companies coming together, with no souls. This is two companies with real people that are going to be impacted by this decision. So with that, let's get started. My first prediction is that I believe this merger is going to actually happen. There's a lot of concern about whether or not this is a good idea or whether or not this is good for consumers and whether or not it will even be approved, because not all mergers are actually approved to move forward. I believe this one will, because at the end of the day, the new company will look a lot like what Discover looks like today. It's a bank that owns a card network. And if you put those things into perspective, this is just going to be a bigger version of that. Prediction number 2. One of the assumptions that a lot of people, mostly in banking actually, I'm not sure that a lot of consumers are concerned about this, but a lot of bankers feel that Discover just doesn't have the acceptance. In fact, Discover has a very high acceptance. It's not as high as MasterCard or Visa, but it's very high. It's above 99%. Most merchants, a large, vast majority of merchants, already accept Discover. However, Discover could have better merchant acceptance, and I believe the announcement of this deal, and if the deal actually goes through or not, will help Discover merchant acceptance, because the fact is that if you're a merchant, you don't want to lose business. And just the idea that 7 million plus debit cards and who knows how many million credit cards are going to move to the Discover network if this happens will make you want to add Discover as a card network if you don't already accept it. Prediction number 3. I was in banking when Bank of America bought MBNA. MBNA was a credit card company that a lot of banks used as their credit card provider. They, instead of having their own credit card in-house, they had an agent bank program with MBNA where they would sell their credit cards. And that's relevant because when Bank of America purchased MBNA, large banks were very concerned that now Bank of America would have a view of their customers. Now that story has relevance here because a lot of banks see Capital One as a competitor, use Pulse as their debit card network. And if you don't know this, Discover owns Pulse. So if you swipe a debit card, the PIN network on those cards could be Pulse or Star or Nice or Shazam or any number of PIN networks, but Pulse is a very popular PIN network. And I believe that large banks, if they're not already reaching out to Pulse and Discover to talk about this, they are already talking about it because they're going to want some type of Chinese wall or something in place to make sure that Capital One does not have insight into the volume on their cards and the transaction information and all of that. Prediction number 4. Lobby groups are already concerned, I'm sure, and probably on the phone with legislators right now. Discover is exempt from some regulation that puts caps on their interchange, the amount that they can charge to merchants, or at least the amount that they can make when a merchant swipes their debit card. So a lot of banks the size of Discover would only be capped at 21, there's a formula, but they would only be capped at about 25 cents per transaction. Discover is not limited by that because of what's called the 3-party exception or the 3-party debit card, where the issuer of the card is also the card network. When Capital One acquires Discover and moves all of their debit cards to the Discover card network, that's going to generate hundreds of millions of dollars in revenue. Prediction number 5. There's another regulation or legislation that's proposed by Senator Durbin and others called the Credit Card Competition Act, or the CCCA. which would require any bank over $100 billion in assets, which Capital One falls into that category, it would require them to add a secondary credit card network onto their card. So if they're a Visa issuer, they would have to add Discover, or American Express, or a MasterCard issuer would have to add Discover or American Express to their cards. But there's an exemption for three-party transactions, or those cards issued by the company that also owns the card network. Discover and American Express fall into that exemption, so they are not required to put a secondary network on their cards. If Capital One purchases Discover and transfers its cards from Visa or MasterCard, its credit cards from Visa or MasterCard to Discover, then it would not be required to add a card network on top of that. Again, just like with the Durbin Amendment and Regulation 2 and how it impacts debit cards, this is credit card. And Senator Durbin, this bill hasn't even passed yet, but I imagine that merchant groups are already asking whether or not we want to allow this three-party system. Prediction number 6. So let's assume that the CCCA passes and it requires Visa and MasterCard issuer to add a secondary network. My prediction is that if that passes, then American Express will most likely become the card network of choice to be the secondary network. And part of that is simply for competition reasons. Prediction number 7. Other large financial institutions are going to want to have their own network after this. And they'll shop around. They'll probably look outside of the US. There's other card networks that could be an acquisition target. And I would not ignore the fact that there are PIN networks that could potentially be an acquisition target, as financial institutions see this as an opportunity and see the value in having a card network. Prediction number 8. I believe Discover will become the lowest cost card network in the market. And there's a couple of reasons for that. First of all, the new company can charge less to merchants, charge less for interchange, because they're not paying a card network. They're not having to, and I'm not saying sharing revenue with a card network, because that's not how it works, but they're not having to pay fees or anything like that to the card network. They're getting all of the income. So they can afford to bring down that cost a little bit and make it a little bit more appetizing for the merchants. And the other reason for that is Discover wants more merchants. Discover needs more merchants so that that perception that they have an acceptance problem, they'll want to bring those costs down just to get more merchant acceptance. This merger and this conversion of cards to the Discover network will be good for merchants at the end of the day, because it really will insert more competition into those transactions. And prediction number 9, my last prediction, the only reason I don't have 10 is because I couldn't think of 10. The two companies coming together will be very competitive among financial institutions. They'll maintain a very high customer satisfaction rating, I assume. I assume they're going to focus on that. And they're also going to maintain a high employee satisfaction rating. So at the end of the day, the merger of these two companies, it makes sense to me. And it also will end up with something that's better, I believe, for everyone involved, and even consumers that are not happy with where they're banking today. So those are my predictions. The only thing to figure out now is what the name of this new company will be. Most likely it will remain Capital One. I'm personally voting for my personal favorite combined name, which is Capital D for Discover, because Capital D just makes sense. I mean, you can't capitalize a 1, right? I mean, there's no lowercase 1. The ones look the same, but a D, you can capitalize that.